Good afternoon, everyone. My name is Ilse Treurnicht, and it's my great pleasure to welcome all of you to MaRS today, and also to the first of a new series we're stitching together under the banner of the MaRS Capital series. As we all know, raising money is a major pain point for young companies, and we do a number of different things in that domain already, but we thought we would start to pull together a little bit more of a structured curriculum around the connection between entrepreneurs and money. And so today is a little bit of a first pilot, and we'd love your feedback, any suggestions that you might have in how we can shape this over time. Obviously, the only interest we have is to produce something that's useful to our community. I think we have a very interesting opportunity today where we're going to take a deep dive in Cleantech, which, at least from the capital perspective, is hotter than some other sectors. I think we also have a really interesting window by looking through the eyes of Emerald as an investment team at how they look at selecting, building companies. We're going to hear from three entrepreneurs, Rugged, Pure, and ARXX, who are going to tell us a story not just about what it takes to build a company, but also what it takes to build a global company from Canada. And I know that's very interesting to our community. And again, flipping over to the investor side, Emerald is a somewhat unique Canadian fund with a global investment mandate. And clearly, sometimes we hear the mythology that there aren't good opportunities in Canada. Obviously, the stage today disproves that. So my job is to just give you that little bit of context, and then my great pleasure to introduce two friends, Whitney and Scott from Emerald. As a bit of background, Whitney started out in the corporate side at EBCOR. And she spent some time at Nomura Cleantech Fund in London, and we're delighted that she's recently relocated back to Toronto. Whitney has lots of accolades to her name, but in 2007 she was named one of the top 10 women in Cleantech. One of the other things that's interesting, and personally interesting to me, is, as we all know, there are very few female managing partners in the Canadian venture capital industry. And she is one of a handful, so delighted to see that, and she makes us all proud. Scott I've known since he was very young, so it's really a pleasure to have Scott back at MaRS. Where Whitney focuses more on the industrial side of Emerald's Cleantech portfolio, Scott carries the IT banner or the IT lens, and he spent some time with OPG's venture fund and has been in the business for quite a long time and really has been a player internationally. I can't tell you how many times I bump into international funds who all know Scott. So he's also a Canadian ambassador of sorts. So I'll hand it over to them, and thank you very much, everybody, for coming.
Great. Well, I'll start off. If you're here to be inspired, to be proud of what a business in Canada can accomplish, and how our panelists are transforming massive industries to do things previously unimaginable, you are in the right room. We have a great lineup of entrepreneurs who are here to share their inspiring stories in water, shelter, and power. Jack Elliot is the President and Chief Operating Officer of Pure Technologies. Gail Mourant is the President and CEO of ARXX Corporation. Marzio Pozzuoli, Founder, President, and CEO of RuggedCom. We'll talk about three key elements that must coexist in order to build successful Canadian cleantech companies. The recipe consists of 1, passionate, iconic, transformational entrepreneurs. 2, a realization that you are born global. And 3, the unwavering commitment to execute.
So let me tell you now about the the 3 success stories. Pure Technologies. Pure is a story about not accepting the old adage of out of sight, out of mind, especially when it comes to the underground transportation of the most valuable resource for human life, which is water. In the 20th century, the world's population has grown threefold, but while the world's water consumption is 6 times higher. The World Economic Forum predicts that water scarcity is about to become a global crisis. Water grids around the world are old and failing, and on average, 25 to 30% of the water is lost through leaks and bursts. Calgary-based Pure is the world leader in innovative technologies for inspection, monitoring, and management of physical infrastructure. In 2010, the company completed 3 acquisitions, with the largest being Ontario-based Pressure Pipe Inspection Company. Pure's products and services are being used to protect massive water pipelines and can detect and locate even the tiniest of leaks. Pure reported 2010 revenues of over $50 million and is listed on the TSX Venture Exchange. Pure has become a world leader in an incredibly important growth industry and is truly a made-in-Canada success story. ARXX. So ARXX Corporation is a story about innovation in a massive industry on the verge of radical change. It's about building homes and buildings in a smarter, more energy-efficient way. Based right here in Ontario, ARXX is a progressive building materials company most well known for its highly energy-efficient external wall products. ARXX products have been used in over 100,000 projects, from 20-story buildings to movie theaters and residential dwellings. The company has won numerous awards for the best new products for insulating buildings and was identified as Corporate Knights' top private market picks. ARXX products enable significant energy savings, superior comfort, and faster build than conventional construction. This Canadian company is changing conventional thinking by constructing homes and buildings that feel better and cost less to heat and cool. And RuggedCom. RuggedCom is a story about a dream turned into reality, about leaving the security of a big company paycheck to execute on a vision to create the smart grid. The company was started out of a basement, because we know Canadian garages are too cold. On a mere $4 million single financing round, the company crossed the chasm to profitability and year after year revenue growth. By 2070, the company completed a highly successful initial public offering on the Toronto Stock Exchange, and today, RuggedCom is a world leader in improving the efficiency, reliability, and safety of global electric power delivery. The company is approaching $100 million in revenue and is proudly headquartered in Concord, Ontario, with offices around the world. RuggedCom is absolutely a Canadian clean tech success story and has delivered significant returns to its early investors.
Okay, so with that, we'll go into the first theme, which is around the entrepreneur. I think everyone in the room appreciates that if you don't have the right entrepreneurial leadership, you really have nothing. At Emerald, we talk about passionate, iconic, and transformational entrepreneurs. We look for people who love what they do and are really, really good at what they do. We look for entrepreneurs that inspire the people around them to give it their all, that are good storytellers and they're really good communicators. We look for people that are the it people in industry. And we look for entrepreneurs that have the courage to transform the industry. So the first question goes out to Marzio. You know, I think, Marzio, it's fair to say that anybody who knows you, and I think knows you very well, and even somewhat well, would say that you're the ambassador of being passionate, iconic, transformational. You know, you left GE over 10 years ago. You know, back then, Marzio was a first-time CEO. I think it's fair to say that a lot of venture capitalists didn't want to take a bet on Marzio because he was a first-time CEO. And here you are today, without a doubt, being very successful, being outrageously customer-centric, and having a great reputation in the industry. And you're transforming the power industry to being that smart grid platform, that intelligent platform that you had over 10 years ago. So, open-ended question, but we want you to go and talk to us about what drives you. You know, what makes up Marzio Pozzuoli? What's in the back of your head and in your heart and in your gut?
And how long do I have to answer this?
You know, we got some time.
I got it, what, 30 seconds? Well, you know, if I had to summarize that, first of all, it's way too flattering, incredibly flattering, and an overestimation of things. So One of the things that you have to keep in mind is that the minute you start believing all that, that's the beginning of the end. When your arrogance surpasses your intelligence and you start believing what Whitney just said, that's the beginning of the end for you as an individual and as a company. So humility is one of the things you have to hold on to. I will say this, in our company, the 3 pillars of our culture are passion, integrity, and execution, and they happen to spell the word pie. And today, I just handed out a pie award to an employee, and we do this on a quarterly basis, who exemplifies that passion. What drives me, what's always driven me, is, and it's the only way I can think of it, because I was thinking about it, when we were talking back in the green room, Whitney was trying to prep me, I'm going to ask you this question, and I'm thinking, wow, what drives me? Well, it's the sense of never having really arrived. So Whitney says, you've done this, you went public, you're 100 million, and I'm thinking about, it took me 10 years to get there. Now I want to get to $1 billion. Now we own 56% of the market. I want to own the transportation market next. And so it's the sense of never having arrived yet. So when I wake up in the morning, I don't look at the stock price. I very rarely look at the stock price. People come and tell me about it. Analysts call me about it. Shareholders call me about it, but I never look at it. What I look at is the next big thing I need to conquer. And we want to be number one in. And that's what drives me every day, and that's what drives my team.
What's in your mind then, Marzio, when you wake up one day and you decide you're going to leave GE, to push on the question a little bit, how do you do that? What's in an entrepreneur's mind when you say, I'm going to leave the comfort of my paycheck and put a second mortgage on my home, and I'm going to go convince a bunch of other people to join me, and we're going to work out of a basement, and we're going to start a company?
So, I will use the saying that I stole from you and have used numerous times about my favorite definition of an entrepreneur. I heard it from Scott. I'm sure he stole it from somebody else because he's not that clever to have come up with it himself. But it goes like this. Being an entrepreneur is someone, the best definition is an entrepreneur is someone who jumps off a building and figures out how to build a parachute on the way down. And if you ever wait until everything is perfectly lined up, so you think about it, I started RuggedCom in February of 2001. So imagine what that was like. The dot-coms had just crashed spectacularly. Nortel was, I don't know where it was, but it was nosediving fast. Tech was in the tank. And here I am wanting to start a company with the word com in it. And I remember people said to me, you got to take the word out. You got to take the word com out. Because it doesn't matter that it's, and some people to this day still call us rugged.com. Yeah. I can handle my name being mispronounced, no problem, but I can't handle the company name being mispronounced. And if you think about at that time, it was insane to start a company. Except to me, it was the perfect time. I saw an opportunity, there was a gap in the marketplace. Yeah, the financial markets were a mess, but if you wait for everything to line up exactly, you will never do it. So you jump off the building and figure out how to build that parachute on the way down. First 2 years, bootstrapped the company ourselves. Took, I think my average salary, so I came from making 6 figures at GE to taking less than 40K a year for 3 years. Remortgaged my house. My wife and 2 kids, where I made sure that, they felt as little pain as possible, but that's what we did. And if I would have waited for the financial markets to get back on track, we would have never started that company.
Good. Okay, we'll move on because I'm sure we're going to come back to this a bunch of different times. So over to Gail. So Gail's got an amazing track record, but in a different area from Marzio. She goes into existing companies and she repositions those companies so they can be wildly successful, and she grows existing businesses. So Gail, tell us what drives you, and you could probably add on to that. When you look at what you're doing within the industry, within the insulated concrete form industry, where you come from the packaging industry, you're bringing actually some different skill sets and some different practices that I don't even think the ICF industry, even to this day, is really aware of. So talk about what drives you, how you're wired, how you look at businesses, and how you take businesses and really get them to that point of strong growth.
Okay. You know what, I think it is about wiring, and I think it is about hardwiring. And the challenge isn't for everybody, because you have to be able to deal with the stress. You have to be able to juggle about 43 different things, all of which are on fire at the same time. And at the same time, you have to be able to provide clear direction to folks so that they don't get caught in the panic and they don't feel the stress. I think it's about having a left and right brain balance. You have to be able to think strategically and execute in minute detail. And you have to understand where the two connect. Because the best strategy in the world, poorly executed, takes you nowhere. And you have to look at where there is opportunity to learn. Many of the challenges that startups or companies going through a period of growth face are challenges that other companies have gone through and faced. And if you take an example, if you look at how successful some of the telecoms and cable companies are in Canada, there was a period where Rogers was on the brink of bankruptcy for many years when they went into the US market. And people forget about that. And Ted Rogers used to say that, you know, every entrepreneur, unless you're willing to face bankruptcy a few times in your career, you're never going to make it. And so you have to have that sense of risk and return. You can't be wildly on the side of somehow if I risk it, it will come. You have to recognize the risk, and then you have to work through the details of how to ameliorate that risk. And you know, in the ICF business, what we tried to do is take, I'll call it the bad habits of the packaging industry, but actually it was really good habits in terms of driving efficiency and effectiveness, and bring it to the business, because this was an industry that was essentially a cottage industry, but it had to figure out how to grow up and play by the rules that everybody else was going to play by.
Right, right. And maybe you could just elaborate a little bit on some of the things that you've done at ARXX, where you've taken in, and this is going to go into our third theme around operational excellence and execution, but you have done a number of things where you've taken practices from the packaging industry and put them into ARXX.
Yeah. And so part of it, you know, when I look at the packaging industry, I always say that, you know, in the construction industry, you have boom and bust years. In the packaging industry, you just have bust and bust. Every year it'll be something. It'll be gas prices, it'll be hydro prices, it'll be, you know, waste prices. It'll be something. And so what you have to learn to do is be incredibly resilient. And part of it is every time you get a challenge, you just recognize that it's something that you have to figure out your way through. And you know, some of the things that we did is we recognized that we had to be able to get out of having a ton of capital tied up in working capital. We had to get out of the inventory business, and we had to run the business in a way that made sense for return on equity for our shareholders. And that was not using cash to sort of build up inventory so that we could cover up inefficiencies in the supply chain. And we essentially went from having millions of dollars tied up in inventory to having almost nothing tied up in inventory, and pushing that back through the supply chain to the people that had to take that on, because frankly that's where it is in other busy and, you know, successful supply chains.
Yeah, perfect, great. Okay, well, we'll pick it up on the third theme. And so Jack, a little bit, you know, open-ended as well on this. I mean, again, you look at Pure, you're in many different countries, and I think that Pure is without doubt a leader in large diameter leak detection, and not just in the water industry. You're positioning yourself in other verticals as well. Could you maybe give us a story of when you had to swim upstream, you had to try the unconventional, you had to do something that was, again, something that perhaps your competitors or your peers in the industry just weren't doing?
Well, I think swimming upstream is quite a good analogy for us. We seem to be doing that in pipelines a lot of the time, and it's even more difficult when there's no way out, so you have to get to where you're going. So I would say that, you know, when we started Pure as a concept, first of all, we've been around quite a while. It's not an overnight success story, so that's a lesson, I think, there, that things never happen as quickly as you'd like them to, and then all of a sudden you're surprised at how quickly they're actually happening once things start to happen. So that's been our experience. We started off originally when the underlying technology of monitoring with using continuous acoustic sensing to detect faults that develop in structures. We thought we were going to build our business around monitoring large bridges around the world and buildings. So what we learned after about 3 or 4 years of plugging away at that business was that if we had kept doing that, we would be out of business because the market was not ready for what we were providing. So we had to adapt and change quickly. And we did that. We identified a similar need in the large pipeline sector. Again, it was a significant challenge to persuade public agencies to actually invest in technology to help them manage these assets more effectively. So we had to do a lot of missionary work and be creative in how we presented the value proposition to the client base. And I think we found things turning around in 2005 when all of a sudden, Mark Hawley is in the back of the room. He's our US president, and he has an analogy that for the first 10 years, he was like the Maytag man waiting for the phone to ring. And I don't think he feels that way anymore. The phone doesn't stop ringing. So we've managed to create a need for what we're providing, or create the awareness of the value of what we're doing. And all of a sudden we look around and we find ourselves in pole position in that area. So for us it was being able to transform from one direction and realize we weren't going to get there that way, and change to another direction. And I think we did that very successfully, and we're very proud of that. I think everybody in the company is proud of the way we were able to develop a new area for our technologies.
Yeah, that's great. That's great. And just one last question, and it's for all of you, and it's about respect in the industry. And I think it's fair to say that all three of you have got a large amount of respect in the industry, but you've all done it in very different ways. So I'd love it if you could comment on how you've gained respect in the industry, given your perspective and your history of where you've come from. So anyone can go first on that.
Gail.
Oh,
Ladies first.
ladies first. Okay. You know, I think it's something about you have to walk the talk, and it's something that you do every single day. It's the example that you hold out with everyone that you deal with, and it's about being customer-centric. It's recognizing who really pays your bills. They're called customers, and recognizing that every time that you don't fulfill a customer need or desire or want, you're going to have to face that in some way or other. It's sort of the old adage, which is if you have a good experience, you tell one or two people. If you have a bad experience, you tell everyone with the pulse you've ever met. And so you have to guard against that, and you have to drill and instill that into the culture that you try and create. It's a culture of excellence, and holding each other accountable and holding everyone accountable for mutual success, which is, it's no good if I can go out and land a large contract and we get it in-house and everybody screws it up, because we're not focused on what drives success. And it goes back to that issue around detail. You have to focus in on the details, and you have to focus in on how you treat people. Because at the end of the day, it's not companies that do business with other companies, it's people that do business with other people.
I'd say from our perspective, if you talk about respect from the industry we work in, like the water industry, we have a few key principles. One is that we do not engage in the hard sell. We're a very low-key company when we're presenting to clients. We want them to understand we listen a lot to our clients rather than try to push solutions down their throat. The second thing we do is we are honest about our shortcomings. So when we fail, we will actually tell the owner we haven't performed up to expectations, and we'll take responsibility for it, and then we will actually strengthen the relationship through that process. And the third item I think is very important from our perspective is to be respectful of our competitors. It's very easy in a kind of a small community to denigrate or criticize your competitors and try to undermine them. And we feel strongly that we have to sell our company on our own merits and not by denigrating somebody else. So that's a very key part of our philosophy in the company. And I'm proud that our people buy into that, and it makes a big difference.
And also probably if you look at Pure's history too, you've been an incredibly active acquirer as well. So it doesn't do you many favors if you're not being respectful of your competitors.
You could well be working with some of them in the future.
Exactly.
But I think the client base really appreciates that. The worst thing you can do, and I've seen this in the past, for example, in other industries is everybody's slamming each other. All it does is devalue the entire technology, the entire sector, and it really doesn't do anybody any good. I think it's hard enough to sell the concept of what we're trying to sell here, but the more, in a sense, competition is good, because if you have more than one entity selling the concept constructively, then there's a much better chance that concept will succeed in general.
Yeah, absolutely. And Marzio?
Yeah, interesting question. Respect. Sometimes I wonder whether I have any here in my own country. It's really interesting. The first order I got was from Korean Electric Power Company. Interesting. Wasn't from Hydro One, wasn't from Toronto Hydro, it was from Korean Electric Power Company. My biggest customer is American Electric Power. I just came back from 2 weeks in Asia. I go into Beijing, Nanjing, Shanghai, where I'm doing the most advanced smart grid projects in the world. And when I arrive, and my team arrives, we arrive in Chengzhou, which is a city that we're building a factory in now, and the politicians roll out literally the red carpet. And I walk in a room, and I'm met by the mayor. I'm met by several city officials, and they know everything about the company, everything about the company. And I recently had our 10th anniversary, and I invited some politicians to come bask in the glory that they had nothing to do with. But I said, come along, it'll be good for you. Learn about what Canadian companies are doing here in Canada. And I couldn't get any to come. It was amazing. It's amazing to me. So in that regard, I don't know how much respect we get. In the industry, from a standing start in the basement in 2001, in 2006, we were awarded the Excellence in Technology Award by Frost & Sullivan. I've seen other people win that award, but it was very unique because that same year, in that same study that they did, they awarded Siemens Leadership in Technology Award, and we were awarded Excellence in Technology Award for our products. In 2007, ARC Advisory Group did a market study and gave us 41% market share in our market. In 2010, we have 56% market share. And we are the #1 in terms of technological innovation. We've done, in our industry, more technological innovation than anybody else. So much so that Cisco, who is a competitor of ours, I think you've all heard Cisco, comes to our website 5 times a day, every day, and downloads everything I do. And if you doubt me, I will take my computer out right now, I'll plug it into here, and I will show you how many times they visited my website today.
That's respect.
Or fear.
I'd just like to add that from the point of view of respect, there's another community, and that's the stakeholders in the company, the shareholders and the investors and even the analysts that cover us. And I think for me, coming from a private industry background, it was quite a complete culture shock for me to get into a public arena. We were public from very early on in our creation, and I found that the key to retaining respect from your shareholders is to ensure that you deliver good news quickly and bad news even more quickly, because I think they really respect the fact that you don't try to gloss over problems or things that are going wrong. We had a recent situation, a little hiccup in our business plan in Libya recently, and I've got feedback from the analyst community that we handled the whole release of the information in a way that made them feel comfortable we were being upfront. So I think that's a very important, again, from the point of view of people who are dealing with investors to remember.
Yeah, and so this is a really good segue into the next theme, which is about being born global. And again, for those of you in the audience, Pure has operated, as Scott has said, around the globe. A fairly significant part of your business, especially in the early days, the last number of years, has been in Libya. So there's some interesting stories that we could probably draw out of him on that. So over to Scott.
Sure, and at Emerald, we think that it was just true to our investment thesis that successful clean tech companies are actually born global. Being located in Silicon Valley or funded by Silicon Valley VC in our mind is not a prerequisite to success. It just isn't. The need for power, water, and shelter is everywhere. The macroeconomic drivers impact all of us, and think about some of these stats I just want to read off. Today, over 800 million people lack access to clean water. World's population is growing by 74 million annually. Pollution plagues us all, especially in urban centers and industrial epicenters. And so demand for resources clearly outstrip supply. And clean tech companies, in my mind, in our mind at Emerald, can reside everywhere, but the really successful ones reach everywhere. And that's one of the differences from the IT space into the clean tech space, and it's a really big area that we think differentiates clean tech from other areas of venture capital. And these companies are up here today and are successful because they figured that recipe out really quick. And so I want to spend a little bit of time talking about it, because I think if there are entrepreneurs in the room that are building companies, selling to Hydro One or Ontario Power Generation alone is not going to build a RuggedCom. So maybe we can start with Jack, because Pure is clearly from the early days, and you've admitted that Pure's been around for a little while, and I made some comments today about getting to 10 million in 10 years, and I think companies can do it better than that. But I think that Pure is a great example of a company that's gone international and done it early. And maybe you could talk about the challenges of doing that and some of the locations you are in the world. And you're a very international guy, so you're well suited for this question, but also how hard is it to do when you're a young company?
Well, the first thing you need if you're going to be working internationally is you need strong people at home to make sure you don't drop the ball in your home market, so you're in your primary market. Our primary market is in the US. We do, if you look at Canada, we probably do about 5% of our business in Canada, so we have to be international in our thinking, or else we won't survive. So we decided early on to establish a presence in the US, and Mark went down there, how many years ago, Mark? 10? About 10 years ago. He was on his own in the office down there. Did you have an office?
It was a basement.
You had a garage, because it's warmer down there, isn't it?
Mm-hmm.
So we made an investment when we could not really afford it, but we felt it was absolutely necessary, and it's been a tremendous success. So the other interesting thing that happened, which was sort of accidental, but not really, I went to visit a company called Brown Root, which was the designer of the Great Man-Made River project in Libya, which is a huge water infrastructure project, $25 billion US. And I went to meet them in their offices in London to introduce our terrific monitoring technologies and inspection technologies. And they said, well, it's all very interesting, but this is a new pipeline, and of course, we don't need that sort of thing here. I think that was in 1997. In 1999, we got a call, an email from the authority, the owner, asking us if we could help them. They had a little problem. One of their 4-meter diameter pipes exploded and created a huge man-made lake in the desert. So that was the start of our actual international operations outside of North America. And ever since, we've invested, I think, in trying to build up an awareness of what we do internationally. And we realize that water is it has global challenges, and therefore there is going to be a market for our technologies. And we wanted it to be first to the market with these solutions. And it takes time. It takes at least 2 years for us to establish a commercial presence in a country, in a new country, for example, UAE. China, for example, they have significant water challenges, but government agencies are hard to persuade to spend money on these sort of proactive measures. So it's a bit, again, a missionary work, and it's an investment, but we feel it's critical to our long-term growth, and we are absolutely committed to it, and it's part of our DNA, in fact.
To pivot off the question a little bit, because I think in an early stage company, part of building success is building a culture, and having sort of this home base feeling where you actually set the culture and the tone of the company. How did you and the firm deal with having sort of isolated camps of people that go out quite early on into foreign parts of the world, but still feel integrated back to the mothership?
Yeah, well, it's a challenge. You know, we have a significant communication challenge. I think it's a challenge for very large companies. It's also a terrific challenge for growing companies. How do you maintain that sort of atmosphere that everybody we're all in the same office, you've got this dynamic going on, and it's really exciting. Everybody's kind of part of it. When they're in Australia or they're in Abu Dhabi, different time zones, it's a bigger challenge. We try to get the people together regularly and exchange, have interaction. We have a very interesting newsletter. I think you've seen it, Scott. It's written by the employees, and it's lighthearted. It's also informative, and it's a terrific way for people to maybe poke a little bit of fun at each other and so on, but it's also a terrific mechanism for communicating in a positive way. So it's a continuing challenge. We've looked at how social networking can help us do that, and we'll continue to look at that. But I would say right now it's very important that we have an exchange of people from branch to branch, and to keep that dynamism going. So it's so far proven to be successful, but we reckon, personally, I think it's one of our biggest challenges is maintaining an effective and positive communication protocol within the company.
I think the internal newsletter, because I do read it, is a great tool that the company has for reaching various people that may feel isolated at times, and they do poke fun at each other, which goes back to the, Marzio's comment about humility, that you have to take yourself not too seriously. And as I think about that, I'm also already learning from the panel today. So in the respect category, my next question, I couldn't help, Gail, but ask you this, but I'll try to do it in a really positive way. But it has to do with, you're clearly not based in Silicon Valley. Cobourg, Ontario, right? As far as from Silicon Valley and this continent as you can get from a mindset maybe. But yet you have a whole bunch of California venture capitalists. So, have you ever asked the question, would you be more successful, would you do better if you were headquartered in the US and not Canada? And then maybe commentary on your investor base.
I think for most companies it doesn't really matter where you are, because I think it is a global marketplace. I think it's about getting the right people in the right roles doing the right things. And ARXX is being based in Cobourg. But I think that what was interesting when we did our last round of financing is that it was out of California. Not that we didn't talk to people in Canada, and so maybe it's a little bit of what Marzio experienced. But there seemed to be a real sense in California that they wanted to be involved with the company, and what we had to offer is we had real revenue. And so I think a lot of the Silicon Valley thing is that, they're looking for the hockey stick approach, which is, we have revenue of $4.86 this year, and tomorrow we'll take over the world. And what we had was real credible millions of dollars of revenue. We had a mature distribution base. We had all of the elements that they were looking for that they were missing. And so what we could offer to do is kind of de-risk their portfolio and give them an opportunity to participate in a different way with a different risk profile. But I think that capital flows very fluidly across the border and internationally. I don't think that it's a big issue about where you're located. I think it's more about the process that you have to go through to raise capital and to reach out. And it is an arduous process, and you have to be prepared to knock on a lot of doors and talk to a lot of people. And it's a little bit like the sales process, which is not everyone's going to say yes. But you have to get your value proposition out there. You have to tell a compelling story, and frankly, you have to sell it on its own merits. And you got to be better than the next guy who's got the right idea that they might like. And 5 people saying no doesn't mean that the 6th is also going to say no. You just have to get to the right person.
Marzio, I noticed your head was nodding there. Do you have anything or any thoughts that you want to share on location and sort of the funding process globally?
Well, our experience was, we really only focused on Canadian VCs at the time in trying to do funding, and we were already into revenue as well. So, we were demonstrating revenue as it was going, and I remember it was a terrible time, when we did it in 2001, because, as I said, the dot-coms had crashed, technology had crashed. The VCs had given ridiculous valuations to dot-com companies, and now the pendulum had swung the other way. And so now, even if you were showing revenue and revenue was growing, they were scared. And I remember no matter what, my pre-money valuation was always $5 million. No matter what my revenue was doing, everybody put a term sheet in front of me. It's $5 million. And I think the difference between, I'll tell you, where we were located doesn't matter. Where the VCs came from did. And I think I've heard, with the exception of the people that are on this stage, and I really don't care what VCs are in the audience, American VCs build great companies, Canadian VCs build great term sheets. That's what they focus on. And what I mean by great term sheets, life-sucking, soul-sucking, the kind of term sheet that the minute you sign it, and people would say to me, but why aren't you signing this? And I'm saying, because if I sign it, I'm signing up for failure. because the kind of term sheets that got put in front of me, and I've saved them. I've got them. I've saved them to remind me, because and every once in a while I go back, and I know now, we're in the public markets, and there isn't a day that doesn't go by that an investment banker doesn't come to me and says, hey, I can raise you $60 million right now, bought deal, no problem. Your stock's at 20, you want to raise $60, $70 million, that's today. But back then, quite a completely different story. And I think that's where location matters. Not where you're located, whether it's going to be a success story or not, but where you're located, the access to the kind of VCs that you have. And I think you were smart enough to go looking. And with the exception of these people here, and I say that because it's true, we were turned down by every VC, and some of them might even be in this room. I think I saw one or two, but I won't point you out. We were turned down by every VC in Canada, every single one. And you know what? I understood why. I got it. There was some check mark that didn't fit, and they couldn't check it off. And the way VCs work is, they have a checklist of 100 things, and if all they need is one not to be failed to say no. It's a great gig if you can do it. So you can always find a reason not to do it. And it took a lot of intestinal fortitude for these two people at that time to invest in us. Because if you listen to the story the way Scott tells it, here you have a company that makes Ethernet switches. Cisco makes them, Nortel made them, 10 other companies made them, and we're trying to sell them to utilities, which are notoriously slow at adopting technology. Now, who the heck would want to invest in that company? So when you look at it from that point of view, every single VC who turned us down and didn't invest had a good reason for not doing it. But they obviously saw something that was different. And I think the difference is this, I think if you're located in Canada and you only have access to the VCs that were here in Canada at that time, then you had a problem. If you were located in the US, and here's where location mattered, you were exposed to a different type of VC. And I think that's the difference.
Of course, he doesn't have US VC, so it's hard for him to compare. But anyway, and the other thing that Marzio is thankful for, Whitney and I only had 99 boxes to check, so the one that was missing got him through. So anyway, the tricks of the trade. No, it's it's something that the VC industry has been in Canada under scrutiny for, and returns have been under pressure. And this is one of the questions that get asked about the approach to taking risk. At Emerald, we think about approaching companies like this from a different standpoint, which is to really look at the entrepreneurs and back the people and worry about the other stuff later and build great companies.
Scott, a lot of companies say that, a lot of VCs say that, but they don't do it. Because the real difference is, if you look at every story that's been successful, it's not about the market, it's not about the technology, it's about the people. And the best VCs are the VCs who can assess the entrepreneur, who make the call on you and me and you. Those are the best VCs.
So since we started on a tangent, I'm just going to bear with me for 1 second, Whitney. She's going to kick me in a second. But you started off by saying the minute you start listening to things like what Whitney was saying about my company and how great we are, that's the death of you. But it's one of the greatest concerns I have about the Canadian industry is that we don't tell the stories and we don't brag enough because we're good Canadians and we say things like you just said, instead of, I think your story, and maybe the audience agrees, is a phenomenal story. And the things Whitney did say are true, yet as Canadians, we don't go and tell those stories. What do you think?
Yeah, no, I think as Canadians, we're overly modest. There's a difference between being proud and arrogant. And that's a distinction I was making. I'm very proud, I'm very passionate about my company. If you haven't got that by now, I must be really jet lagged from my trip to China. So I'm very passionate about it, but I'm not arrogant about it. And the minute I start being arrogant about it, that's the beginning of the end for both me and the company. And that's the distinction I was trying to make. And we are very understated. We are, as Canadians. We don't brag enough about our stuff, and we should, how should I put them? Talk more about them. Bring up, the success stories more. I agree with you, Scott.
Okay.
We go to these micro-cap conferences in the US, and it's actually quite stunning. We tell our story, and again, in a Canadian way. And you have these companies that are putting up these amazing stories. But actually, when you look at what their business is like, it's a fraction of what we're doing. So we're saying to ourselves, maybe we should be a bit more outgoing in promoting our story. But, in the long run, I think if you deliver the goods, you get there eventually. So I think it's if you put a story like that out, you're going to have to live up to it. So you better be sure you're going to perform if you're going to talk at that sort of level. And I think that's something that...
I'm not suggesting we go crazy. I think we're just the scale's a little bit too one-sided. And Gail knows the same story. She, in the green building space, a number of US companies that have valuations that are bigger than yours, and yours that have
Yeah.
Yeah, it's unbelievable.
But that's also going to catch up to them. You know, I think that if you create a company that's based on hype and valuation based on hype, rather than, you know, revenue, profits, a solid business model, products that make sense, it'll all catch up to you. And, you know, to some degree, that was a little bit about the .com. It's just that green building materials and the green building space is going through that again. And it is a little bit of the Wild West because everybody wants a taste of it. Everybody thinks it's the next big thing. But, you know, if you go to any of the big building shows or trade shows, like at the U.S. Green Building Council trade show in Chicago last year, I mean, they had Butler buildings, and they're now green. They're steel structures. I don't know what makes them green. It's not like they're insulated. They just happen to be green because they want to be green. Maybe they're painted green. But, you know, that's kind of where the green building space is going, which is, I appeared in front of the parliamentary committee, and it was looking at a wood first bill. And the guy from the wood lobby stood up and said, you know, wood is the most sustainable product on earth. It's fireproof, which was a shock to me because I actually put it in my fireplace. And they went off on this, and there's the politicians on the subcommittee listening to this, and you just want to put your hand up and going, are you kidding me? It's wood, it's from a tree. But that's what passes for truth. And I think, you know, the appropriate thing is, it goes back to your question about respect, which is you have to have the integrity and respect to tell the right story and to know the difference between what somebody might like to hear versus what the real goods are.
And this is a perfect segue into execution because that's what this is about. It's about kind of marrying the, you know, the truth about success, but also living up to the reputation, or maybe having the reputation precede you a bit. And so we have done some thinking around execution as well.
Yeah, and I think we've probably already touched on a little bit around the execution, but you know what we say is great entrepreneurs know how to handle surprises, and you know, when the surprises pop up, it's not necessarily a deviation from plan, but really the entrepreneur looks at those surprises and figures out how do you address it and how do you stay focused on the plan. But execution isn't just execution, it's good execution. You know, I think a lot of people can execute, but if you don't do it properly, then you've got a bit of a problem. And of course, execution is a really good metric to say that you've got phenomenal entrepreneurial leadership. It's the product of a good entrepreneur. So, you know, and I think, again, you know, I say this, and we have a debate within Emerald and amongst ourselves around, again, as Canadian entrepreneurs, investors, we don't do enough to say, wow, you know, we have had great successes. But I think all three entrepreneurs here up on stage are very, very good executors. And Gail, we touched on this already around what you're doing from a best practices standpoint, you know, with pushing inventory onto suppliers, taking that inventory down. I know you're doing so much around the supply chain, and freight is also one of your really kind of your goals is to bring that freight cost down, because you can imagine as you're providing products into the green building space or just the overall building materials industry, the freight is a key component that drives your margins. So I'm going to put it over to Marzio to go next, and this is really around when Marzio started RuggedCom, and he was at a stage where he could entice venture capitalists to invest, and Scott and I were two of the three venture capitalists that came into RuggedCom. I remember, and we have this dance with everybody, and I know Gail just finished a financing in November where she brought in some fairly significant fresh money from California, and we always say, are you raising enough money? And we always think, because the time is right. While we're doing a financing, that's the time that you get the amounts right, because God forbid you close the financing and you look at that cash balance and you go, oh geez, you know, wow, if we had only raised another, you know, $1 million or $2 million. And Marzio was absolutely steadfast on, I'm only needing $4 million Canadian dollars. That's it. Yeah, well, it started with two, probably started with one. But I only want $4 million, that's it. And then we closed the financing, And I remember shortly thereafter, we had a board meeting and we were looking at the cash balance. And because we had all these crazy lawyers involved, and Gowlings wasn't involved in that. I don't know if Gowlings is out there, but they're sponsoring our event later. But we had these lawyers, we had all these legal fees that went out, and we looked at the cash balance and went, oh boy, did we raise enough money? And Marzio said, absolutely, we raised enough money. And I am never going to raise a single dollar again from any venture capitalist in the industry. So, so you did a whole bunch of stuff around good execution. And Guy Bridgman, who joined the board from EPCOR, Guy Bridgman had a great analogy. He said, it's like you've got the ship, and the ship has these holes in it, and you're putting these corks in the holes of the ship, and you're just making the ship as streamlined as possible. And that's what you did. And I call it asset optimization. It's just taking the assets you have and working them better, being more efficient with what you've got. So why don't you share, again, you've got this perpetual kind of, elusive hunt for profitability, and this whole notion around capital scarce. So just work it as hard as you can.
If you think profitability was important then, you should see how important it is when you're a public company. So here we were at 4.6 million in revenues. We do the 4 million raise, and at 5.7 million we become profitable. $5.7 million in revenue. Never looked back, have always been profitable. Delivered 19 consecutive record quarters of growth. When we became public, we delivered 8 consecutive quarters of better than 10% growth quarter over quarter. And I'm very proud of that, because that is the ultimate measure of execution. That's not a fluke. That's not a one-time thing. Didn't just happen for a couple of quarters. We sustain that. And I told you about the 3 pillars of our culture being passion, integrity, and execution. And execution is the word I use the most often. And it's about building a culture. I think the most important thing is to have a culture of execution. And execution to me is just a simple act of getting things done. And good execution happens not when everything goes from A to B in a straight line. Because guess what? Every year, every quarter, something happens that you hadn't planned on. Go and get me a business plan back from 2008 and show me where it says, in anybody's business plan, where it says, and in the 4th quarter, there will be the most massive economic downturn that we've seen in the last 50 years. Do you have one? I don't know. I didn't have that in my business plan, and yet it happened, and we had to deal with it. How many foresaw some of the things happening in Japan, which are now causing part shortages? So things like that happen every year, every quarter there's something that happens. And so the culture of execution to me is about dealing with that. And the only way I get to sleep at night is by putting good people in place, who know how to get things done. I can't put it any simply. There is no magic to it. It's having the right people in place. The number one characteristic that I look for in people, perseverance against adversity. That's, if you know anything about my life, since I came to Canada, I immigrated here in '68. When I was 5 years old. My whole life has been about perseverance against adversity. It's the number one characteristic that entrepreneurs and people who know how to execute have to have. Because, how do you prepare for the unexpected? You don't. You can't. But knowing that there are people who know to persevere against whatever's thrown at them, that's important. Also having a discipline about saying, no matter what we do, we will always be profitable. That's the way we run the company even now. The public markets know that. The analysts know that. And no matter what we do, whether we make an acquisition, whether we invest in China, whatever we're doing, we're always going to keep profitable. And that sets some boundaries for you and forces you to behave with a certain amount of discipline.
Yeah, absolutely, absolutely. And I think probably all of you can comment a little bit about just advice to startups, because I think that there's a bit of an addiction towards capital. And we're really hoping, what we love about Marzio, Gail, and Jack is that they understand the importance of customer. And customer is the way that you release your dependency on capital. So capital coming in from investors. So what advice do you have to entrepreneurs, to investors, just around the addiction to capital and doing, more with less?
I think it starts with, you have to recognize that if you take money from others, you are beholden to them. And they have an expectation of return. and that's sacred. And if you're not going to do everything you can to generate that return, you ought not to take the money. And particularly when you go into the capital markets. But I think, to the point you were just making about discipline, which is a lot of people think that capital is a panacea. Somehow if I had more capital, my business would be successful. And that isn't what makes businesses successful. What makes businesses successful is the right people in the right roles doing the right thing, and a real focus on customers who want to come back and who want to spread the good news. And you have to have a value proposition, and you've got to message it correctly, and you have to build a culture of success around accountability, so that people actually care about what they do. And if they come to you with a problem, they come to you with a solution. And it's intertwined. I mean, you can look at any number of great companies. Southwest Airlines was a great example, which is if you ask them about what they did differently, they didn't say it was one thing. They said it was sort of a whole bunch of different things. And Dell Computer, it wasn't just one thing, it's a whole bunch of different things. And I think you have to look at success as part of an ecosystem. Capital is but one part of it. And whether it's the air or the water to the ecosystem, it's a really important part, but it's not going to define the ecosystem. Mm-hmm.
I'd say from our perspective, the capital situation is sort of self-governing. In the early days, we found it difficult to raise capital. We were a little bit different. We didn't go the VC route. We went the junior capital pool route in the Alberta Stock Exchange, which is actually kind of a VC really, because you're counting on a number of shareholders who are going to invest in the company and stay committed to it. So we found it difficult to raise capital in the early days, and so we had to make do with what we had, and we reached the point, I'm sure as we all did a number of times, where we were almost out of cash and we scraped through, and then you start to perform, and then more capital becomes available, and we're not adverse to capital if we can put it to good use, and if our shareholders believe we can put it to good use, then we're certainly going to look at raising capital, because we see so many opportunities. The challenge for us is making sure we're investing in the right areas. And if we look at other technologies that we can deliver through our structure that we've built, which is, I think, quite impressive internationally, we have to look at if we were to purchase that technology, or what would it cost us to develop it ourselves, and the opportunity cost, the time cost, versus taking it in-house from a vendor, and see if we can make better use of it. So for us, it's kind of an interesting situation coming from the background we did, and I would say to a lot of the entrepreneurs out there that it's all, from our experience, it takes longer than you think it's going to take to get off the ground, and as long as you're prepared to stick with it and be committed and passionate about it, and there's a market for your technologies, then you will succeed. So that's been our experience.
That's great. So I actually think that that's a logical conclusion to our panel. And what I want to do is stir it up a little bit and have the audience participate. We've got microphones in the center. Clearly, we've got these three themes, which is around passionate, iconic, transformational entrepreneurs and being born global. And of course, the third one being around really good execution. But of course, you don't have to stick to those. And we've received actually a few emails from different entrepreneurs who are planning on attending the event that had views as well that they and questions that they had. So with that, I welcome people to the mic. Please introduce yourself. Tell us where you're from, and ask away, because it's a rare opportunity where you will find three really successful Canadian clean tech entrepreneurs here up on stage.
Thanks a lot for being here. Firstly, I'm Ahmed Bedruddin. I'm one of the founders of Simplify. It's a smart grid software company. We're still in our year one, and we have a software solution for utilities. And what I wanted to ask was more about what you guys are doing in your first year, and more about your first sale, and what you guys were selling, what was your value prop, and how you got that first deal.
This is a good one for Marzio, since he's sort of in the same sector as you, actually.
Yeah, I mean, you're selling software, so your infrastructure costs will be much less than ours. We were making switches and routers, so our costs were a little bit higher, but there was a gap in the marketplace. It was very simple. Nobody made an Ethernet switch that could withstand the electromagnetic interference in a substation, and we did. and it was very easy for me to sell. And at that point in time, I knew that communications was all going to be going, all sorts of communications networks for automation were all going to be IP-based, and Ethernet would be the underlying technology. And it was a very simple proposition. Nothing like this exists. There's a gap in the marketplace. We've made one. And by the way, the very devices that you're going to connect to it are the devices we designed in our past lives at GE. So it was we had great credibility in the industry, which is why we were able to get companies like American Electric Power. So the value proposition was very simple. You need this. It doesn't exist. Here it is. Try it out.
Well, I think a lot of it is getting the value proposition right. Not how you look at it, but how various audiences look at it. And so we serve a variety of audiences. So we deal with architects, engineers, building materials distributors, contractors, developers, builders, homeowners, commercial designers, and commercial owners. And so it's a recognition that you have to get a message that resonates with them, and they don't all care about the same things. And you have to actually break it down and be very segmented and very targeted and get that message around. Exactly, if there's a gap in the market, you need this, here's why you need it, and here's the benefit for you. And they're all different. And if you don't get into that level of detail and break it down and get the messaging, it won't resonate, and they'll kind of look at it, which is, that's an interesting idea. I wonder what it has to do with me. So it is about getting that granular.
I think the lesson we learned was that if you can't sell the value of what you're proposing, you can't give it away. I mean, we found that you know, the price is not the important thing when we're selling to our clients. These are our clients who have significant infrastructure. 75% of it is underground. They don't know what they have. I mean, when you look at the challenges they have, it's amazing they're able to operate in that way. So you know, you have to sell the value, and then the pricing, you know, depending on the competitive environment, of course. But if you have a technology edge, or you have some barrier to entry, I wouldn't, you know, I'd be very careful trying to drop the price to get the job, if you know what I mean, because once you set the bar low, it's very hard to get it back up again. So be careful in that.
Let me just add this to that. Go out and buy a book called Inside the Tornado or Crossing the Chasm. Buy either one, by Jeffrey Moore. Buy it, read it, follow what it says, and you'll have your chances of success, especially if you're a startup and your technology and your market hasn't crossed the chasm, it's in the early stages. The trick to crossing the chasm, and we would be the poster child for Jeffrey Moore's book, is to pick a niche in the main market that's underserved, so there is no leader yet, and develop champions in that niche. And if that means for the first couple of years that you're giving them software just to try until you develop champions in that niche, then so be it. But eventually, if you try to go after the mainstream market, the main market, you lose. If you pick specific niches, what he calls bowling pins, and he calls that the bowling alley. So there's the chasm, the bowling alley, and then the tornado. The tornado usually follows, you know, it means hyper growth, you know, where you're growing 40, 50, 60% every year. But before that, you got to win in the bowling alley. And it's if you start speaking that language and you buy into the philosophy, I mean, we did, and it worked beautifully. And to this day, here we are 10 years later, we still talk about bowling pins and whether or not it makes sense and whether or not we can become the leader and how adjacent it is to the bowling pins we're already in. As far as we're concerned, the tornado hasn't happened yet.
It's interesting. Ilse's nodding her head because she's seen this for so long and doing this for over a decade. We've seen so many companies. Those aren't just words. That's a strategy about how you build a startup. And so many companies go and try to attack the main market and they get slaughtered. And it happens time and they take big amounts of VC money. And going back to Gail's comment, capital doesn't solve your problems. It just gets wasted when you have the wrong strategy about how to build a startup.
Yeah, I mean, Jeffrey Moore was a VC, and he had seen too many companies try that, and they fell into what he called, they went through the death spiral, where they did multiple rounds, still didn't generate profitability, 4 or 5 rounds, and they did the death spiral. It's a brutal spiral. And he had seen that time and time again. And so you're getting it from somebody who was, you know, a VC. And he said, this is what it takes to be successful, and I happen to agree with him. It's a great book.
Maybe I can add something to that. I think I agree with it. It's very important to focus on our niche and be the leader and develop a lead that will sustain you, you know, give you some gap between you and the competitors that are coming on. I would say, again, to people in year one of their business plan, very important within that niche to make sure you have more than one target customer, because it can be very disappointing when that customer, for whatever reason, decides not to buy, and all of a sudden you're back to ground zero. So it's good to have enough leads in the hopper so there's something dripping out all the time, and it's very easy to be drawn into this big sale you're going to make with one customer, and you can be often disappointed, I think.
Anyone else? This is free time with shrinks and coaches up here that are highly skilled.
Ilsa, there we go.
I think the entrepreneurs have done a fantastic job, but I have a question for Scott and Whitney. In many of these partnerships between investors and great entrepreneurs, when that relationship really works, everybody wins, and it's a really key part of having a functional partnership through that growth period when stuff happens. What kind of co-investors do you look for, and what kind of co-investors do you specifically avoid?
Oh God, I knew
You're much smarter than me.
Oh boy. I don't mean to simplify, but I'll simplify initially. We look for co-investors that we've worked with in the past before, and we've had success in chemistry with those co-investors. I think Marzio would be the first one to say, when he thinks of his venture capitalists, he doesn't think of Emerald, he thinks of Scott, he thinks of Whitney. We think of individuals that we would co-invest with and work with because we've done so successfully in the past. Now, it's not to say that because we haven't done work with others in the past, and there's so many different venture capital funds that have emerged now that we don't have as much experience with, but we do check them out. And with Emerald, because we do have a sister office in Switzerland, and we are absolutely dedicated on figuring out who we like and who we don't. We do a lot of work on understanding the networks and the value that investor will bring. So, for instance, we're just negotiating with an oil and gas technology investor right now who's based in Texas that has got billions of dollars under management, and they have got an incredible network of oil and gas contacts that we want to bring to this company that's developing a novel technology or novel product to the oil and gas industry. And that's something that again, because we haven't worked with them in the past, but they've been in our circle of friends, if you will, we're willing to give that a shot. So I put that out. Now, Scott, you're going to add to it, I'm sure.
Absolutely. I mean, I think that the number of companies we've dealt with and partnered with in the last 10 years is vast. It goes from all the the names you can think of in Silicon Valley on Sand Hill Road, who bring a great brand name reputation, and they bring different things. They're to the Canadian funds we've partnered with, to corporates, and we have a lot of corporates as our investors in Emerald. So groups like Dow Chemical and Unilever and Bosch, and we've brought those companies into Canadian and North American companies, and they bring something different as well. When you ask what's a favorite, it depends on the company and where it is and what you're trying to succeed. But I go back to the comment that if we're trying to grow the company through sales, any investor that can help us win sales or bring credibility to the company is our favorite kind of co-investor. To the first comment that Ilsa made about the partnership, that's worth a pause on, because I think that the true recipe for success is having fun and loving what you're doing. And so if you don't have a good relationship, and Marzio talked about the vortex of life-sucking term sheets that he received, if you don't have instant credibility and rapport with your investors or the management team, you're off to the wrong start from day one. And so many people get it wrong in that negotiation phase, which is just like it's not even the first date, it's the phone call to get the date. And people don't realize you have to spend so much time, and the intimacy that a VC has with their portfolio company is not like a public equity manager that may call and want to sit in on call on a quarterly basis. There's a very different experience that they have. And so I think that, I mean, you're better to comment because you have to work with these types of people all the time. Marzio, you're free from that.
You guys almost to comment on it though, right?
But it's a very important dynamic because we've seen investors wreck companies. Mm-hmm. That's your cue. You don't have to answer.
Well, I mean, we're a little bit different because we've got 5 major Cleantech investors in the company, but it also goes back to the issue between Canadian and Americans.
got 5. Oh, my people.
Yeah, I know. Board meetings are so much fun. But, it's very different in terms of the approach. I mean, one of the, and one of the things that's great, I mean, you guys really do walk the talk in terms of bringing a network in, introducing us, making sure that we have contacts that we would not otherwise have. But I think that what you see is a different philosophy. And in fact, what I learned is there's actually a different investment thesis behind each of the investors that came in. I mean, they like the product, they like the company, but they have a different reason for doing it. And I think what you have to do is bring that together and create some understanding around what the real value is, where you want to position yourself, and how to take it forward, because otherwise you're going to get, caught in this endless debate around exit strategies and how to build the company and which direction to go in. So there has to be a real consensus around why people are investing, because it saves you from having a lot of angst down the road where investors have a very different expectation of what their exit may be or what direction the company has to move in, because it's going to be tied to what capital may be required versus what resources and what direction you have to move that company in, which may be different from what the expectation was.
And you can't get away from the relationship. Marzio transitioned from a VC relationship into a public markets relationship with the shareholders, and Jack the same thing. But you're getting a unique taste of us because we joined as part of an acquisition, and I think we're a little bit different of a shareholder that they may not have been used to. But we're nice people. So
I was just going to comment on that. I think yes, they are very nice people, of course, and but I would say they brought a different dynamic to our board. For example, we have a very strong board, which is really focused more on corporate governance. They come from the oil and gas industry and the business community in Calgary. But they weren't water people, but I think Scott's brought a new perspective to the board. I think it's been very helpful for me personally in trying to explain our strategy of growth to the board. And coming again from a VC background, it gives them a different perspective. So we found it I personally have found it very beneficial in dealing with the board.
Yeah, the only thing that I would add again from an investor standpoint is that it goes back to Marzio's comment that if you don't have the right people, you have nothing. And because we have surprises that happen on a daily basis, a weekly basis, I think it's about trust. And so if you were to ask, kind of our approach at Emerald, what we say is that we trust Marzio, we trust Gail, we trust Jack, and we're not going to go in there and micromanage and distract you from task because we know that you're going to get the job done. You're going to try your very hardest to navigate through it. And I think that's one of the things that we actually look out for when we're co-investing with other investors is that if they have a tendency of when times are tough to be micromanagers, that is, to me, that's the kiss of death, because trying to get a venture capitalist in there to run a business when you've actually placed a bet on the entrepreneurs to run that business, that's the time you've got to let them run the business.
Well, I've got a big smile on my face now because we have history on this. And so I won't get specific, but when they did the investment, Whitney wasn't originally part of that investment. Scott actually had a different syndicate, and it didn't work. And he had to throw those people off and bring people who saw things just like you said. And so I lived that, where Scott had put together a group of investors, and he had brought them in, and it just wasn't working, and the chemistry wasn't working, and they didn't have, the same cultural values in terms of how to treat management and how to look at management, and we had to change that. And that actually happened in our deal. I'll tell you something else, which I always like to tell the story about our term sheet. It came to me once. I crossed one number off, sent it back. It was signed. That's the way our term sheet negotiation went.
And I got the date. This gentleman's been waiting really patiently here.
Thank you again for your time. You spoke about the need for credibility and rapport with your potential investors. I moved to Toronto to try to start a project development and investment solar firm. I've been studying the industry on the business side and the technology side for about 7 years. So my problem was I've never worked in it and I lacked the experience. So I put together a board of directors that was a past president of EPCOR and a successful entrepreneur that's built a lot of construction companies. Coming here, just the sole person that's working operationally, if a group of VCs were looking at someone as myself, would having that background of education and having the team behind me be significant enough to have the credibility, in front of a group like yourselves?
It's hard. Every situation is kind of unique. I think that what motivates us is domain expertise and passion. So if you have some kind of, you just didn't read it in Fortune magazine 2 weeks ago and figure out that this is a great place and it's hot and there's a FIT program in Ontario and you're coming here because there's a gold rush on, but you actually live and breathe and are passionate about it, and you can hear these people, right? Like they won't stop, they just won't stop talking about their businesses. They'll go out and they'll keep talking about them, they'll get on a plane and they'll start talking about the guy in the seat next to them about where they were and what they're doing. They live it. We feel that. We know who's real and who's not real. So if you're real and you live and breathe it and you're going to surround yourself with great people, you're going to get there, but they will all tell you it's not without a lot of work. It just doesn't happen by accident. So I would say persistence and passion are the two most important things as they nod, because it's what it's about, right? Persistence and passion. I don't know, maybe you guys have better advice for them. But.
Well, I could tell you from my own experience that I dread waking up in the middle of the night because I know I'm not going to get back to sleep. So, and when you think about thinking through the job and the business we're in, it's something that's all enveloping. It takes over your life, which is not necessarily a good thing.
No, I'm definitely afflicted with the same thing. Just the problem is some people always want to, say you need experience. But if you have the experience behind you and the passion and the persistence, I just thought if you think that's significant enough, then I'll take your word for it.
Marzio was there. People wouldn't return his phone calls. Now he doesn't return theirs. So
Well, if they're a customer, he does.
Oh yeah, well, I should have specified.
No, perseverance is adversity, right? The ability to persevere, right? And you have to show that you have faith in yourself too, right? So I went, mortgaged my house, sold all my G stock options, took less than 40K a year when I was making 6-figure salaries for 3 years. That's commitment on my part. And we were lucky enough that I was able to convince a bunch of people to also come join me and do the same thing. So when people came and looked at the company, they saw that, and that gave me credibility in the eyes of the investors. A lot of them, though, decided that the company really didn't have any future. In the end, the really good VCs, they invest in you.
Perfect. Thank you very much.
Great. We'll do one more question. So the woman at the back there.
Okay. Thank you. My name is Neha Trinelli. I'm a manager in the assurance practice at Ernst & Young. And my question is a bit specific, so I actually I did write it down. I'd like to congratulate the three of you. I think this is a terrific panel. And Marzio, you touched on this a bit when you talked about the challenges that you faced in 2001. And what I wanted to bring up was that there continue to be some conflicting views in the media today in articles about the clean tech space. So we read about how clean tech is it's the next big industry to come out to grow in the future, and this is really Canada's future. And yet there continues to be some professional skepticism in some areas, as well as just a funding gap for clean tech companies. And given that we're coming out of a recession, investors, banks, and more importantly, customers, are struggling with where to spend their money today. So what would be some advice, some specific advice that you have for entrepreneurs sitting in the room on how to deal with these different diverging views and some specific steps that they can take to grow their business?
Can I just, I have a particular perspective on the clean tech business, and I think the need for promoters of clean tech companies to really demonstrate value to the potential end users, regardless of government subsidies and other inputs that can distort the actual true economic value of the technology or product. So I think it's critical that, and I think once clean tech companies can demonstrate a track record of that, and I think many have, but I think the investment community will become more comfortable with it. But my own personal feeling is that it's difficult for investors to sort out what are true value generators versus what are artificially, how should I put it, positioned in a way that they're seen to be contributing. That's my own personal.
And I think that it goes back to what I was talking about, green. You know, what is green, what is clean tech? I mean, they're broad terms that people try and fit into, sometime to rescue a business or product or strategy that isn't really clean tech or green.
I agree.
And I think that it's like everything, we'll sift our way through this. But I think that, you know, most companies that have a viable product, a solid business strategy, a value proposition that makes sense, and a market that needs to be served, they'll find the capital. And I'm confident of that. They'll find it either in Canada or they'll find it somewhere. I think where the challenge is, if you don't actually have all of those ingredients of success, it's going to be really tough. And for the clean tech companies that are looking to rescue a different business model and try and make it into something different, it's not going to happen, because I think investors are sophisticated enough that they can tell the difference. But you know, for those that want to build a business, I think you have to really get down to understanding what it is that you're offering, where you're offering it, who you're offering it to, and what the real value proposition that will drive the business forward.
To answer your question around just the clean tech space and the momentum or lack of momentum, back in 2000, clean tech wasn't the term, right? That was founded, and we'll take credit partially in Canada for that term, Nick Parker and his group at the Clean Tech Group. But we used the word sustainability back in 2000. The truth is, these are trillion-dollar markets. They're not going away. There's inefficiency in them, whether it's the water grid or the electricity grid. There's the electric vehicles. There's all kinds of areas within smart grid which are huge, massive markets. They're inefficient. So I think that if you look at it, what happens in any cycle is it gets overhyped. And you know, California started paying attention to clean tech in 2005, 2006, deployed a lot of capital. And so then people start saying, well, where are the exits? Well, guess what? Marzio told you what happened in 2008 and 2009. M&A was at all-time lows. So none of the investments that were made early days of clean tech were really exited, but it's changing. If you look at just our Canadian portfolio and you look at companies like Pure and look at their value on the, you know, on the stock market or Marzio's, incredible returns to the investors. We just announced this morning that we sold another water company, Inge Technologies, out of Germany to BASF, and I can tell you it was a venture capital return. So we're starting to see those exits, which are the true definition of success. It's just, I think what you're seeing is a media backlash. So yes, you've been promising things for 2 or 3 years, where is it? But I can tell you, we're happy that it's not a crowded world right now, because you know, we see all of the VCs who are not true clean tech players kind of not in the space. They're not there. It's not good for the entrepreneur community, and to some extent it's not good for us either. It's not that it's competitive, it's cooperative, and we need co-investors. We really do, because some of these companies require a lot of capital. But I would tell you one thing, it's not going away and it's not a fad. It's just not for everyone, just like being an entrepreneur is not for everyone.
Yeah, just to add on to this a little bit, I think there's a lot of capital around for clean tech companies. You know, I go back 15 years. So Scott and I have been investing in this space for 15 years, and I just looked over to Jerry Proddy here in the front row. Jerry Proddy is an executive who comes from Alberta and you know, has led the way around energy technology investing for decades. And you know, in the 1990s, when I was part of Jerry's team, we funded energy technology companies, and it was, to Scott's point, it was well before clean tech came out and before the masses even understood what it was. And Jerry, I mean, I think if we look back to the vintage that we had in the 1990s, we made tons of money in the 1990s around energy technology investing that we did. So it's been around. You just have to look under the hood. And again, it kind of goes back to Ilse's comment on just being smart about, you know, who you invest with, and to make sure that they actually do understand the industry, they do understand the pain points, and they know how to bet on people. Because you've got a lot of big funds that have come into the space who have absolutely no clue about this industry, but they come from a banking background and they think that they're just, you know, they know how to grow a company and put the fairy dust on them. And so you've got to somehow distinguish the real McCoys from those that perhaps aren't. And I think it's great that you asked the question, because man, it's getting out into the masses, and that's what we've been waiting for a long, long time.
So everyone's been really patient with us, and I can tell the audience is interested in what we had to say just by the nature of the questions, and the body language is great. What I thought I'd do is demonstrate to you right now that male venture capitalists actually listen. So I'm going to recap. I may not be able to read my writing, but I can recap. So under entrepreneurial leadership, Marzio said, keep your humility, and he's driven by a sense of never having arrived, and it's that unrelentless need for an entrepreneur to go and get up every day and try to achieve the unachievable. Jump first and build the parachute next for all of those waiting for the perfect setting before you leave your job and start that company. Gail talked about finding the balance between the left and right brain, and that strategy is so important, but also that you have to find detail in execution because God is in the details. And then take risk, but make sure you mitigate that risk. Jack so eloquently said, things never happen as quickly as you expect, but you can ramp fast once you've paid your dues. And I use the term, if you want the muscles, you need to do the push-ups, to the entrepreneur in the room. Gail said, walk the talk. And then Born Global, we switched the dynamic a little bit, and we talked about that, and Marzio said, if you go international early, no, Jack said it, if you go international early, make sure someone's minding the shop, so that you don't drop the ball in your home location. You can be located anywhere because capital flows. It's what Gail said. And I think Marzio said something about the difference between proud and ambivalent. I think that was the word, ambivalent. So going back to our discussion around Canadians and being proud. And then on execution, I think no one in the room disagrees that execution is everything. Without it, great ideas, great technology, fantastic, but they'll end up behind the stage here on the ground. Execution, what turns dreams into realities. And so execution is about putting the right people in the right place. And Marzio has a great analogy which is used over and over again. I believe it. I'm an advocate of it, which is the perseverance against adversity. And people and entrepreneurs that do that actually find a way of succeeding. Not at first. They wander through the wilderness, but they eventually get there. Gail talked about the false impression that if you had capital, it would solve all your problems. And this goes to the capital efficiency problem, and don't think that just if you find that money or that government grant that you'll be successful. And Jack, to finish it, said, execution is around focus. That's profound, man. Did I say that? Yeah, you did. So on that note, I hope that you have all enjoyed the session today and learned something from it. I told you I already have in a couple points. Thanks to Ilse and the team at MaRS for helping poke us and prod us to make sure that we did this event. It's been phenomenal. Thanks to Gail and Marzio and Jack for joining us. And as a token of our appreciation, just before you wrap up, we just wanted to give them a lovely Patagonia vest. And they're made from recycled polystyrene fibers from pop bottles. So not only are they stylish, okay, they're also completely functional. So the next time you guys want to start up a company, you can do it in the garage instead of the basement. So thank you very much. We really appreciate you sharing your valuable time, because it truly is valuable, and your inspirational stories of real Canadian success. And thanks to the audience for joining us. And I know that the MaRS team, and Carrie, I'd like just to say one word, but thank you from the Emerald team.
Great. And yeah, definitely. Big round of applause. So I just have 3 things. One, this is our very first kickoff to the MaRS Capital Series, and we're very interested in hearing your ideas of who you'd like to see, what stories you'd like to hear about, so catch one of us afterwards. But I wanted to end on, thank you so much, Gail, Marzio, and Jack. You are the real deal. Elsa whispered that to me during the thing. You are Canadian entrepreneurs we're all very proud to hear the stories of, and we should hear more of them. And thanks so much to Whitney and Scott for loving their entrepreneurs and being the real VCs to bring them here and profile them. So thanks very much.